When I speak about the possibility of a price crash in property market, the builders, brokers and their entire ecosystem gets hyperactive. They try their best to prove a point, even when they have no point. Even if they throw some data point, it is mostly the select case studies of a select successful project in some select market and not the property market in totality. They forget the fact that the average price appreciation of apartments in Indian cities has not been in double digit. As a matter of fact, a CRISIL report claims that the average price appreciation of property in India in the last 20 years has been a meager 6% CAGR. Is this what qualifies real estate vested interests to claim that real estate is the best asset class and ever appreciating asset? The historical price trend, which is often interpreted as no price crash in property, has often entered into a zone of time correction. What is time correction? Time correction is when the price of a given asset is flat for some time, and that time could prolong to a few years. Now, with inflation not being constant and always going up, and your property prices remaining stagnant, your asset is depreciating faster than you can think. But wait, before someone comments that his property price doubled in the last 10 years, let me remind you to go and check it with a CAGR calculator. These tools are nowadays easily available on Google. You will find it yourself that the doubled price in 10 years only gives you a CAGR return of 7.2% per annum. Even the most optimistic projected growth of Indian real estate by IBEF, India Brand Equity Foundation, is 9.2% till 2028. Will price correction finally happen this time? If yes, then by when? The critics, or should I say vested interest, will jump to use my text without context. You said property prices will crash, but there is no crash. When will it crash? You are saying it for so many years that prices will crash. Hold on. Do you even understand the concept of time correction? Has not it happened so many times in the past? Do you think a crash is necessarily in absolute number and not in relative comparison between asset classes? Say for instance, person A bought a house that has got into a time correction phase and not appreciated in the last 4 or 5 years. But person B bought mutual fund or gold of the same value that appreciated at the CAGR rate of 12%. Is not person A losing the opportunity cost of money? Please understand that I do market assessment and not astrological forecast. And no one, whether a journalist or economist, can foresee the exact future of an asset class of a given economy where problem is at two ends. One is that the concentration of wealth is constantly going up the value chain, and where the parallel economy is as good as the formal economy. Is not it the reason why real estate in India has not crashed like in many other countries in the past, like the US, Dubai or China? Real estate is the only avenue left where one can easily park the proceeds of a parallel economy. The mismatch is in circle rate and market rate is huge to adjust the cash component. But does it mean that the prices can't crash in Indian real estate? Answer is a clear no. I would say the question itself is not in the right perspective. The right question is, for how long can the deep pocket investor stay invested in Indian property market? With rising poverty, low wage growth and job losses, a crash is definitely on the cards. After all, Every home buyer is not in the market to park his ill-gotten black money. Most of the end user buyers have bought it with huge loan that is as good as mortgaging yourself to your house and job for the next 20 years. But are these jobs insulated in today's economy? More importantly, who are these buyers with houses on high loans? Go to any housing society in India's top tier cities and just do an assessment of the job profile of most of the home buyers. They are mostly well-paid IT professionals. As a matter of fact, IT sector has been the major demand driver of Indian property market due to well-paid jobs, and they are the ones facing a potential job loss today with the emergence of AI, artificial intelligence, and emerging geopolitical economy. How many of them could hold on to their my sweet home in the wake of job losses? Every IT professional in India does not come with a sound financial background. The price correction, price crash, or time correction, whatever happens, will hit the secondary market the most. The developers will resist any price discount for as long as they have the holding capacity, thanks to their pool of investors with black money. But the property market will definitely be a bleeding ground for any home buyer who has over leveraged his finances to buy a house. I do understand that the critics are into property business and they can't afford this property crash. Forget a crash. They are so scared that they think a video analysis of a journalist on YouTube could hurt their fortunes. Why? Because deep down they also know the reality. Trust me, I also don't want a market crash, but not for you as stakeholders of property business. Rather, for the sake of common Indian home buyers who have no other social security. With rising inflation and job losses, their survival is at stake. Now, before you react with but people are buying costly property, let me tell you that's a different story altogether. Who are these buyers who are still buying houses and costly houses in such a grim economic uncertainty? Well, that's a matter of discussion in my next video on this topic. I rest my case here. Thanks for watching and also thanks for criticizing my assessment of property crash. I love you all.